Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. We'll talk about the banks. They seem to be the story of the day. Levi's disappointing earnings from after the bell. T-Mobile being added to the S&P 500. PayPal gave some guidance. Don't forget, we have Jerome Powell testifying in front of Congress today. That starts at 10 a.m. Eastern time. So a lot to get to. Plus, we'll answer your questions from our chat. Our guest today, Victor Anthony, Managing Director at Aegis Capital. He's a sell-side analyst. He will break down what he's looking at as far as his coverage, his recent ratings changes, upgrade, downgrades, etc. That'll be at 8:35. In the meantime, Joel, what is going on here overnight?
Weakness overnight again, Spencer. SPOOs are trading down 6 handles at 29.75.50. Pre-market high right above Tuesday's high, 86.25. We got the 87.5. Nice target on the upside. On the downside, we stopped at 71.25. Really nothing there for you, folks. The low from yesterday, 63.5. So just kind of meandering just below mid-range on the session. I'm sure we're all waiting for Jerome Powell to come out and say that the quarter point cut is off the table in July. That's what the banks are anticipating. Crude up $1.34 here at 59.17. A little weak on supplies, so trading up nicely on the session. Gold down $3 at 13.97.50. Silver in the red by a couple pennies, and Bitcoin up $565 at 13,325. We are all keeping an eye on that former high of the move, basis the futures from a few days ago, and that comes in at 14,175.
Going to 20.
Going to 20.
I think it's going to 20. Gonna stay with the bullish forecast.
What's the driver? Just the momentum? Is that what you're
Yeah, and FOMO. People think they're going to miss out there. That's what keeps buying every pullback. Nobody wants to miss out. It's got the story going again. It's all about the buzz. I mean, the buzz died for a while there on Bitcoin, and the buzz is back. And it broke out from 5,000. It's never looked back. 5 to 10. I think we're going 10 to 20. I think it's going there. So bullish Bitcoin.
All right, bullish Bitcoin.
I don't like being bullish yet, but I'm just reading the technicals. And I mean, you don't have to like a fundamental story, but you can still like the technicals and make trades off of it. And, if I was a crypto trader, I'd be long.
Yeah. Also, I noticed last night that I was watching the futures trade just before I turned it in. I noticed that, the SPOOs were quiet. Crude was kind of quiet. But the most active trading, and I'm not talking about volume, but the most active trading and changing in bids and offers and actual trading was Bitcoin and gold. Do you think that there could be some kind of arbitrage going on?
Nothing. No relationship with Bitcoin and gold. I'm going to say that. I think Bitcoin, it's small. It's not even it's its own world. So, crypto versus crypto, sure, there's relationships. This arguments that, crypto versus gold or crypto, I don't buy that. I don't think it's the digital gold. I think it's just, it is what it is. They think it's eventually a means of transaction. I don't really know what it is. And that's why I've never invested in it. But I just say, we trade anything technically. And that's really all you have on something like Bitcoin, because we've said before, there's no cash flows to analyze. There's nothing there to analyze, really. I mean, with gold, you can break it down and you say, there's uses for it because you can break it down. You can make jewelry out of it. It is a store of value. I mean, it's been a store of value for years. You can argue that same thing with Bitcoin, but it's digital numbers on a computer screen. So it's what people want to pay for it. So we just move right to the technicals because I don't have anything else I can possibly use as a valuation tool. And I look at it from a technical perspective, and it looks like it wants to go higher.
And if it is a spread, it really widened out over the last couple of days.
I think there's zero relationship between gold. People think gold's going to zero and Bitcoin's going to the moon because this is the new gold. I don't buy that argument. Gold is its own thing. It's got its own fundamental drivers. Obviously, when we get into situations where there's fear in the market, gold starts to catch a bid. Now, for whatever reason, gold has actually done fairly well, especially even in June, considering the market's done in June too. So this positive correlation between gold and the markets is kind of new, but it's doing its own thing too. It's odd that we've had some good technical drivers going on gold as well. So the luster is back, at least short term. But I've said before with gold that I'm not, I don't own a lot of gold stocks, and I'm not a lover of gold either. So I don't think we're going to gold 5,000, 10,000. I guess if you believe in hyperinflation coming, maybe that's an argument for gold. But I'm underweight gold.
Yeah, very, very underweight. I mean, it just doesn't go anywhere. And
I think there's better places for your money.
Right. And also the gold stocks have even gone less than nowhere, right?
The gold stocks have been disasters, really, when you put it in perspective. Yes, we've had a little rally here in the last month. It's been a really nice month for the gold stocks. But if you bring up the GDX over the course of the last 10 years, GDX was $57. It's $25 now. So, this is back in 2012. So if you've been investing in gold miners for the last 7 years, you're down 50% on your money. So that has not been a good investment long term, at least in the last 7 or 8 years. And really, if you think about gold in itself, where are we on gold right now?
Let's just call 1,400.
And where were we in like 1980? Were we not $1,000 on gold?
My chart, my chart doesn't go back. Let's see.
I think we were. I think we were in the 1,000, or maybe even higher than that in 1980. So you're looking 40 years. Really, gold has gone nowhere. So is that, mean it's eventually going to break out and start to run? It hasn't kept up with inflation at all. Like, people think it's an inflation hedge, but it has not really. If you bought in the lows in the 90s when it got down to $300 an ounce, yeah, I guess you did okay. But even when you're considering, in the 90s, it's 25 years ago, so the thing's, tripled since then maybe. It's still not even great considering what the markets have done. So gold is massively underperformed. I think that massive underperformance continues over the long haul. Short term, though, gold has a little bit of life right now.
You want to see an interesting chart? Pull up Newmont Mining here, NEM, and boy, oh boy, this thing has had the rally, and just look at the long consolidation period here between 37 and 39 here. I think you got a setup on a move here, a breakout or a breakdown. But
I think the move happened. We're up, $30 to $39. That's almost a 30% move here in a month and a half. I think the easy money been made. Can it continue? Yeah, the recent trend is your friend. It does look like it is breaking out, so I agree with you here. But, is it going to go up another 9 points from here? I guess if you think gold's going to blast off to $1,500, $1,600, $1,800, I guess. But I think, the easy money's been made in gold.
In June, yeah. I'm looking at it. I'm not saying it's necessarily breaking out or breaking down. What I was just wanting to point out is that you had the move. Now you've had a pretty long consolidation here for almost 2 or 3 weeks. So the consolidation is going to be resolved to the upside or the downside. So 37 looks like, great support for now, and 37 to 39. Just keep an eye on it here. Eventually going to get a blast into the mid 40s or give some of this move back. But we have an earnings report from last night actually to talk about, and one of Dennis's favorite stocks.
Is that Levi Strauss?
Yes.
Is that one of his favorite stocks? Okay. Or maybe one.
I got my Levi jeans.
Favorite pair of jeans.
Nice.
Q2 EPS for Levi, 7 cents, missed the 13-cent estimate. Sales, 1.31 versus $1.3 billion. So a slight beat on the sales, but a bigger EPS miss for the second quarter.
And Joel is joking there, but I don't like the stock at all. I think it got up, had a nice run up ahead of the report, classic run up ahead of the report, needed to beat. There was a figure that the sales were down year over year. What were they down, like 20% year over year or something? Or not the sales, the EPS. Maybe that's something to do. They were, expanding. I don't know, but here you got a recent IPO of an old blue jean company. This is just not going to be the growth stock that I think everybody thinks it's going to be. So I'm not interested in LEVI. Yes, it is down. Yes, it's pulling back. Yes, there's some support down at 21. Maybe for a trade you bounce there, but I think rallies to be sold in LEVI.
Just hanging out here, 2193, really at no good level. What Dennis was talking about is you had 3 lows and a 21 handle on this little run up. So if you're looking to cover short, 2157, 2120, but then you have the really big 4 lows in a row at 20, let's call it 2070. I don't think we'll see that today. And shorts are probably a little bit happy, but no reason to run out and rush out on this one. Went from 2050 to over 23. You had the pre-earnings run, a little bit of a disappointment.
What they make? How much money do they make this quarter?
They made 7 cents a share.
How much are they projected to make this year? Did they give any earnings projections for the year? I'm just trying to figure out what the multiple is on this thing. Did they give any earnings projections for the full year?
I'd have to look a little deeper. They may.
Well, can you do that?
Give me a minute to find it. Yeah.
Yeah, jump. I've got a P when I'm just looking at my system. It says 21. I mean, that's reasonable here. It's not like you're paying a crazy amount with some of these IPOs, but it's a gene company. I just don't know. Like, it's an old gene company. I don't know. Unless they've reinvented the wheel or something here. I just don't see the huge driver to be jumping in genes. I mean, think about where retailers are. The retailers are absolutely in the gutter. I mean, Kohl's, Nordstrom, Macy's, they're all in the gutter. And maybe, they're selling different stuff and maybe it's a department store thing, but I just think retail is just not performing. There's been basically just a couple of sectors that have really underperformed, and retail is definitely one of them. I mean, oil in the long term or in the last while, it's come back a bit, but it's underperformed. But retail's been a disaster. I was talking with one of my buddies at Bright Trading last night. We're looking like Nordstrom. You look at Macy's and you think, okay, well, are these things starting to get attractive, these prices? I mean, Nordstrom's 4.79% yield. Kohl's is a 5.62% yield. It's a hell of a dividend. Macy's is 7.07% yield. I mean, they have these huge dividends for a reason. And that's because they think that this earnings, is that they've got problems. Stocks don't go to 7% dividends if they don't have issues. And, obviously, there's probably people speculating that the dividend is not safe. I don't know that or not. I know out of the big 3, Nordstrom, Kohl's, and Macy's, if I was going to buy any one of them, it would be Kohl's. I have played Kohl's before. I think if Kohl's got down to the 30s, I'd be interested again, because that's where I played it successfully before. I bought it a couple times in this 35 area over the course of the last, 5-6 years, and it's worked every time. So I think if it fell another $10, I'd be interested here. But I just don't know if the retail story is there for even a stock like Levi to be coming in here and buying the dip and saying, okay, they're going to come right buy this right back, because the overall retailers sector is just not doing great.
All right.
Did you got the Kohl's news? Because it's from yesterday.
No, he was asking me. I was asking about the Levi full
year. Right. So here's what they guided yesterday. They said on a constant currency basis, the net revenue growth for the year is going to be at the high end of the mid-single digit range. So let's call it 6%. 6%. Okay. 6% of what, though? 6% of their revenues from last year, which was, I believe, $5.6 billion.
Okay.
So they're guiding 6% growth, more or less, on
better growth.
Yeah.
Not crazy growth.
On net revenues for this year.
That's for revenues. And then earnings, do they say how much they're supposed to make this year?
No, they didn't.
Okay. Anyways, you're getting a little bit of growth, I guess they're saying there, but it's not a crazy valuation. But I just think, I try to think from an investing standpoint, I've got my investing hat on here right now. I try to think, what is the driver? Where is this a sector that I want to be invested in for the next 5 years? And it is blue jeans. I mean, it's the same thing with that Chewy stock I was talking yesterday, like, on the show, and I kind of dogged it a bit. I dogged it a lot. It's called a pets.com part 2. I mean, you said you buy your stuff on Amazon. Another friend of mine said he buys his stuff on Amazon. And I'm sure, there's still Amazon is there. Yes, maybe there's a lot of people. Kramer says everybody uses Chewy. Maybe they do. But I remember pets.com being a hell of a, stock for a long time, too, until it all imploded. I don't know if that's the case. I've done, literally 5 minutes of research on this, but just from, the thinking. And this is sometimes your initial thoughts are your best thoughts. So just initial thinking is like, okay, it sells pet food online. I mean, that doesn't sound like that huge of a growth area to me. When you go and you think about like stocks like Square, which I recently invested in, like that's, popping up everywhere. These terminals, everybody's starting to use this. I mean, there's no doubt there's growth there. It's just a matter of what you're paying for it. But there's a story there too and a potential driver. So I still think the best spot for your money is tech and growing at a reasonable price. Like I don't like to pay 100 times earnings or anything, but if you can find stocks that are, and maybe people are going to argue with me, well, Square is trading that, but Square is growing so rapidly, it might actually grow into this multiples. I mean, there's projections that this could start making $2 a share. You start thinking about that and starts trading with a P of 20 or 25, it starts to look, fairly attractive. Now, maybe those are overly optimistic projections, but the growth is there. So, I think there's just, better opportunities in going and buying and investing in blue jean companies and companies that sell pet food online. That's
Kohl's will pack, label, and ship Amazon returns for free at more than 1,100 stores in a bid to increase foot traffic and perhaps increase sales.
I like Kohl's.
Yeah. So
of the retailers, I don't like any retail. I hardly own any retailers in my long-term portfolio. But if I had to own one, it would be Kohl's. And I think if it gets down into the 30s, I think I might throw it in there again.
Wait,
I said, it's worked before.
That's not new news.
11 hours ago.
That Kohl's headline?
Yeah, I'm seeing.
There's no trading on Kohl's. I don't think it's
actually, that was a couple days ago. You're right.
Oh, yeah, Joel. Anyways, it's not breaking news, but whatever. Joel's giving us a headline there. They're trying to compete. I mean, the bottom line, they're trying to compete with Amazon in whatever way they can. So all of these department stores are getting Amazon. It's a stock we haven't talked about on the show for a few weeks. Do you see Amazon? Amazon is almost at all-time highs. Yeah. When did that happen? We are 1988 this morning. All-time high on Amazon. What I got? 2026? 20?
I got 2033.
2050. 2050. I have a high on September 7th.
Let me see. Let me go back. Oh, yeah.
Anyways, we're within like 2% of all-time highs. The stock just continues to come back. It's every dip on Amazon. We got down to 1,400 a couple times there, and then we got recently down to 1,672 when everything sell in May and go away. Well, they didn't. They sold in May and then they regretted it immediately. Amazon is, come back here again. So, and you see this overall trend, and the trend is to sell traditional retail and buy Amazon. That has been going on for years. And it continues to go on. We had a nice relief rally on a lot of the retailers at the end of last year. I don't know what that was all about, but that rally is long gone. And it's the same thing again. A lot of these stocks are back in the gutter, and Amazon's at all-time highs. So hard to compete with Amazon.
All right. Let's talk really the strength in the market this morning. The bonds. The TLT, I'm sorry, banks, not bonds. Banks are showing excellent relative strength today because the TLT's in the gutter.
Yeah.
This is probably anticipation of what Powell's going to say today at 10. I mean, is this a broken record or what?
The TLT is the story of the day. You can say lots of different stories, but from my trading perspective, and I think from a lot of trading perspective, this is the story of the day. TLT is breaking down here again. You're seeing utility stocks get hit here in the pre-market. You're seeing, the XIU is down 40 cents right now, which is a big move for it. You're also seeing the banks rip on this. We know there's an inverse correlation between the TLT and the banks. So the banks are trading higher here on the TLT weakness. If that reverses, obviously you'll see the trade go the other way. But first, one of the first things I come in every single day on my trading day is I look at what the SPY is doing, or the S&P futures if it's before 4 o'clock in the morning, and then I look at what the TLT is doing. Because the TLT is a driver for a lot of different sectors. So right away, you think anything that's interest rate sensitive is probably going to get hit. You can look at, the banks want higher interest rates, so they obviously are doing well in the TLT weakness. But your utilities, your REITs, your home builders, stuff like that could be a little bit weaker here this morning. So right away, I'm biased to sell those, at least for a day trading perspective, and biased to buy the banks, at least from a day trading perspective.
All right, and the driver for that is Powell's testimony at 10 a.m. I mean, he's not going to come out and definitively say what rates are doing. It's just going to be volatility. And Spencer, you said that was at 10 a.m. today? Yeah, so that's what will be the mover here. I see Bank America trading up 19 cents here at 29.54, up 0.65% when the market's down almost 2%.
Yeah.
Showing good relative strength.
Yeah.
I guess for BAC, the other day, what did it sneak up to? It snuck up to 29.57 would be your first target. That's your 4-day high. But back on July 1st, I don't know what the driver was. It wasn't unemployment. I can't remember. Went to 29.85 and faded off that quickly. So 29.85.30. That's a big, whole sell zone area if you do get up that high. But first things first, you got to take out 29.57, and that's currently where you're trading at in the pre-market.
So just jump into other individual stock stories. We've got a few things. T-Mobile's going in the S&P 500. That's why it's getting a lift here this morning. But let's go to the ratings parade. There was a lot of action here from ratings land, and I just want to jump into some of that action.
All right. How about Goldman Sachs? What they putting a buy on Comcast?
They upgraded Comcast to buy today.
Upgraded Comcast, Dennis.
I mean, this is opposite to my thinking. I'm not a big fan of Comcast. We know that. I've dogged the stock for a while. I've obviously got egg in my face because you know what? The stock has actually performed. I've hated it probably for years. So, it was up at 40, went down to 30. I was looking pretty good. It's back up here. And I mean, for whatever reason, they continue to buy Comcast. Maybe it's their other businesses, but I didn't read the Goldman notes, so I don't know the reasoning behind this upgrade. But we know what I think of Comcast. It's not going in my long-term portfolio.
And it's opening into an all-time high. All-time high, 43.
That's a good thing, though. It's breaking out. I mean, from a technical basis, it looks good. I don't like fundamentals, though.
Yeah, and 92 cents up. I mean, I'm not paying up 92 cents for Comcast for a long trade going into the all-time high here. I mean, how much stock does it take to move at 92 cents? I mean, you do have the ratings going way opposite the market. It's a NASDAQ, right? So you can't see the book. I mean,
it is Goldman. Goldman is very influential. Okay. So I'm not surprised. If there's a broker that's going to push to a new all-time high, it's Goldman. I do believe it's going to break through 44 and oopen on a new all-time high here today. Is that an all-time high? I go back on my chart for 8 years. I think it is.
Yeah, 43.95 in April. So
yeah, you're right up here at major resistance. So I think it could break out, but could be one of those breakouts become a fake out. So let's see what happens if they can continue to buy this. I'm not sure what the fundamental driver, why it continues to perform, when everybody's cutting the cord, but obviously they got a lot of their businesses there that must be doing very well.
This will be one where, let's say it opens up 43.90, 43.95. They clear out the size at 44, and then there's no one home.
Sometimes peak it, sometimes.
Just trying to give you a possible scenario where you take out the size, you go up another dime or, 8, 10, 12 cents, and then come back down below that number or below the open. So we're keeping an eye on that opening price and see what happens at 44. I mean, it's been up there. This is like the 4th month in a row it's been up there. So with Goldman pushing it through, 5 cents away from an all-time high.
Give us some other highlights from ratings land, Mr. Israel.
Oh, there were a bunch today. We had the Comcast one.
I'm so impressed by them.
I mean, we're sort of in the quiet before earnings season here. So I mean, there are some ratings here, but nothing that really blew me away.
How about Loop Capital and the railroads?
Okay, Loop Capital is downgrading CSX and Canadian Pacific this morning, both to hold.
So both those stocks are trading down. Deere, not that I'm gonna throw it in there. Who downgraded Deere?
Let me see here. So many to go through. That was UBS.
UBS downgraded Deere. So we're going to go to that one there too. But first, the railroad, CSX, CP. CP is up near the highs. So I guess this is evaluation. Is CP they downgraded? CSX and who?
CP and CSX.
Okay, because CP hasn't even traded this morning. So CSX is trading down about 60 cents, offered at $76. I don't know if they're going to kill these. It's Loop. It's not, hugely influential. The Deere one's more interesting to me because Deere has had a great run in June. We went from $140 up to $166. Now you get a downgrade. So that's interesting. It's down $2 here. They're hitting it. I think I want to see what it does at 160, but there's definitely some people who are stuck here, at least the bottom of the last week and a half, that would be looking to get their money out now. So it becomes more interesting because we always say what runs up quickly can run down quickly. There's not a lot in there in Deere.
No, let's see. We're trading at 161 even, so that takes out your 2-day low of 161.11. So if you're looking for immediate fade on this, bounce off it, your pre-market low is it 160 even. So longer it takes to get down and take out that 160, I think a little bit more chance of a rebound. Just a big run in June, but it's how many times you see these big runs in something, you get a downgrade. Maybe it goes down for a day or two, and then
people, who want to buy the pullbacks too. They want to buy strong stocks, and it's definitely still been strong. The only thing with Deere is you're kind of failing in the same area you've failed so many times. Look at this 170. And I know it's a long ways away from here, but it's just interesting. Every time you go to the weeklies, back in 2018, yeah, you got over it a little bit. And then recently we tried to bump our head up against 170. We couldn't. And then just a couple of days ago, we got up to 168.87. So we start getting anywhere near that 170. It just has major resistance up there. So, it's 161 here this morning, so we're ways off of it. But eventually, you got to think there's going to be some people saying, I don't know if it's ever going through 170. I want to ring the register on this gains that I have from the last month when it's up 20% a month.
Just real quickly, CP, Canadian Pacific, technically been quiet for quite a few days here. Just a big seller at the 239 area. Don't know if we're going to get up in that area with the downgrade. And on the downside here, I don't see really it getting fun on the downside till you take out 235. CSX, that one's been a little bit weaker as of late, so you got to keep an eye. You did take out the low at 75.88. You're kind of trading right there right now. But your next daily low to lean on that one would be 75.09. So that's down another stick. So, not heavily traded stocks. But that's, just hanging out near all-time highs. Both of them, really, CXX and CP. So a little valuation call. We'll see if the market follows with it.
Yep.
I was going to go JP Morgan initiating, but it's two stocks we don't talk about too frequently. S&P Global and Moody's, both at overweight this morning. So SPGI and MCO.
Neither stock has had a trade here this morning. Neither stock is getting any action from this. So they're not even really bid up. I mean, SPGI has an odd lot bid there at flat, but I mean, are they going to get a lift on this? Yeah, after initiate JP Morgan, they probably get a little bit of a lift. That SPGI chart kind of looks nice, actually. It's been going up in waves. You go up, you pull back a little bit, and they buy it again, pull back a little bit, and it goes up, and it pulls back a little bit. Well, you're playing that. This is the buy opportunity there if you're playing it just from that technical perspective. MCO, kind of same story, up in waves, looks similar. The buy, except the pullback was bought yesterday already. Now you're going to get some follow through here if it's a rating change, or if it's initiated with a buy, it's probably going to push it up to the 200 area. So, they're the trend's your friend. I'll give you that.
Yeah, Moody. I'm no trades as you mentioned. Moody's right near an all-time high. 202.73 is the all-time high made on Friday, and 202.61 is your all-time closing high. So if you're looking at some targets on the upside, not heavily traded stock, Moody's traded $500,000 yesterday, and SPGI, I don't think that's probably very widely traded either. So thin stocks, but got some good news. That traded $1 million yesterday, so that trades a little bit more. Let's move on. Any other analysts?
The only other thing that's notable from analyst land today is Goldman Sachs initiated Norfolk Southern NSC at a buy. They also added to their conviction buy list, and it is trading up this morning.
Goldman moves stocks. NSC is going to come into a huge number at $200. Well, actually not that huge because it was already cut through it, but I always just think big psychological levels. So let's see if we can get back up over 200. It lost 200 3 days ago. Let's see if we can get back up over it. That's where it's going to challenge this morning.
203, if you're looking for a number above that. Dennis mentioned the one daily high at 200.26. That was from when was that from? That was from the 8th, which was Monday. And then above that, boom, you got pair of highs at the 203 level. So it's funny. TradeStation on the daily is already showing, it's showing the 300 shares that already traded. But keep an eye on 203 if it gets up there. Pair of highs, 202.74 and 202.74 and 203.30.
We got about a minute before I'm balances. I was just getting ready for that myself. I want to talk Facebook quickly. This stock is approaching $200. Still have it in my long-term portfolio. We know the driver has been Libra. There was a little bit of news overnight on it. Again, it tried to get up there overnight. It kissed through 200. It kissed around 200 a couple of times last night. Hasn't got up through it today, but it's bumping its head against it. I think obviously there's going to be, off the hop, there may be some, sellers there, but I think eventually if it bumps its head up enough.
Dennis, watch out here. We're watch your offers.
Is there news?
We got big rally going on. We just popped. We just popped 5 handles here. Be careful. I don't know. Now we're green. Now we're up $1, up 6 handles, up 7 handles. Something. Give me the news. Breaking news.
I'm looking for data. I don't see any.
Gotta be some data. I didn't know it was coming.
Powell. Wait, did Powell just say something?
No. 8:30. It's got to be an 8:30 number. It's right on 8:30.
Right.
Yeah, I'm
right.
still looking.
I didn't know there was any data coming.
I didn't know there was any data coming.
At the wheel.
Hold on a second.
I don't think there was any data. Powell inflated.
No,
pressure.
that's not.
No, that's it. There's something else. I don't know what it was, but I'm just watched. If S&P.
All right, this is a call to cancel orders button.
We had jobless claims and we had CPI. So those don't typically move the market.
No, it's all about anticipating what Powell's going to say here. Look at that. Dennis, you didn't get picked off on that.
A little bit.
Okay.
Yeah, a little bit.
Okay.
Trying to work here. You guys are
go ahead. Yep.
Up here.
All right, we can go ahead, work out of it, and we can continue. We got our guest coming on in 4 minutes here. I mean, that pop just came out of the blue here.
So wait a minute. So he says, where did he say something? He's not speaking yet.
He must be. He must be speaking right now. That
was right on 8:30. So there's usually an 8:30 number when I have movement right exactly at 8:30. But Powell is saying stuff. So did he just coincidentally speak right at 8:30? Maybe. Economy performing reasonably well. Powell is talking.
Yeah.
So it's got to be Powell as the driver here.
Yep. That's it. Yeah.
All right. I guess
statement. He made his statement ahead of his statement. So
nice.
That's what you get. You got the driver, you got the S&Ps trading up 275 now, up 3 points in the green.
We got a reversal on the banks going on here, big time here right now. TLT has rallied a little bit. It's surprising. TLT is still heavily in the red, but the banks have turned heavily in the red here too now. So either TLT is really lagging, or this initial hits on the banks is going to be. I think it's wrong. Yeah, so, a lot of things happen on headlines, but the TLT is still, we've rallied on the TLT somewhat here, but I don't know.
Hey, well, got it.
I'm trying to readjust here because TLT is still in the red, which tells me I should be still buying banks, and all the banks just went heavily in the red. So it's interesting.
Interesting to say the least here, but it's nice to get some movement here. New highs for the session coming up here very shortly. 87.50 was your pre-market high. Let's go up let's get another target in here. Monday's high, 2994.75. So that was just a wicked rally here. Spencer, let's see what happened. Gold's rallying on this, up $6 here, now over 1,400. Silver rallied off this. Just buy everything. I mean, that's just what it is. It was just a buy everything rally on a statement. Fed will act as appropriate to sustain expansion here. So there is your breaking news.
Banks are all heavily red. TLT is still trying to rally, so maybe just slow. XLU is went green. So this changed everything. Everything just changed here on a dime, on a statement. Let's all whipsaw headline driven this market is. I mean, everything, not just an S&P 10-point rally. You've got all of a sudden we were looking at banks strong, utilities weak. We're looking at the exact opposite scenario here now, which is crazy.
Opposite day. Is it going to be opposite day here?
Oh, I'm just saying you've got headline risk so much out there. Like I've got orders floating. I'm playing this from, a TLT being weak perspective and everything changes. So what do I do in that scenario? I cancel all my orders immediately because everything I have out there is going to end up getting picked off because I'm in the wrong direction on all this stuff. So, when that happens, like when you have a sudden move like that and you're doing a live radio show where you're trying to keep your thought that you're trying to adjust 200 orders. So, it's a tricky thing to do. But right now, everything has changed. So, that we're now seeing the banks very weak. We're seeing TLT, rally significantly, but from where it was. But I'm just wondering if it's overdone because the TLT is still in the red. And, Goldman's down $2. So something's got to give. TLT is going to continue to rally here, or Goldman's going to end up, not, being down $2. So there's definitely a lot of interesting.
Yeah,
trades.
setting up some good scenarios.
Yeah, let's go get our guest because I've got to go trade.
Oh,
I'm sorry. I have just way too much going on here, so I'm off.
Good timing for that. We're going to take a quick break and grab today's guest, Victor Anthony, Managing Director at Aegis Capital, sell-side analyst. We'll be right back in a moment here with Victor.
Anthony. Hey guys. Good. Yeah, sure.
All right, welcome back, everyone. PreMarket Prep, Spencer Israel, Joel Elconin, Dennis Dick, now joined by Victor Anthony, as I mentioned, Managing Director at Aegis Capital. Victor, how's it going today?
It's going good.
And I want to start broad here. First off, I don't know if you saw the statement from Powell that just came through, and if you did, do you have any reaction to that?
I have not.
Okay. Well,
seen
it seems like he just teased his entire testimony today at 8:30. So looking like a rate cut is more likely now. But I want to ask you, before we get to the stocks in your specific coverage universe, we earlier this week, or I don't remember what day it was anymore. Maybe last week, we saw Rosenblatt downgrade Apple, and then the next day, or the day after, or 2 days after, 3 analysts rushed to Apple's defense. So as a sell-side analyst yourself, when you see a big upgrade or downgrade to a stock in your coverage, are you watching what other firms are doing and taking note of that and reacting?
Yeah, I mean, just to be clear, I don't cover Apple,
right.
In this scenario, I think we all, tend to keep an eye out on what our competitors are doing. It could be the fact that we may have missed something, and the competitor has seen it. And so, you have to keep abreast of, what the competition is saying, what everyone is saying, essentially, not just your own research. You do your own work, your own fundamental research. You try to make it as tight, concise, and as correct as possible. But you do have to, see what others are seeing. And, you try to refute it if you believe it's wrong.
I want to ask you about a stock that just got taken out recently in your coverage, Shutterfly, a deal with Apollo to be acquired at $51 a share. Was that a good deal for Apollo?
Yeah, it's a good deal for Apollo. I don't think it's a good deal for shareholders of Shutterfly. I think, they should demand a much higher price, mainly because, I think the deal, essentially undervalues the business. And I think, Shutterfly had some troubles towards the end of last year. And but they are recovering from that. I think they're in better fundamental shape now. And the core business has been improving. We saw that in the first quarter's results. And I think, there's some runway with the Shutterfly business, solutions business. The model generates significant free cash flow. So I think the deal price essentially undervalues the business. So I'm surprised that, the shareholders haven't really, gotten together and try to push for a higher takeout price.
What should it be valued at?
I was thinking that, a fair value would be around $56 per share.
Okay. I want to ask you about Snapchat here, another stock in your coverage. This is actually this is one that I was like gifted a one free share by one of those like free trading apps. That's the extent of my exposure to Snapchat. But thoughts on Snapchat here, Victor? They've had it's had one of the better years of any stock in the S&P.
Yeah, it has. And I think that's a testament to the fact that you have increasing per user engagement. From my advertising checks, we've seen increasing advertiser interest in Snap. And there's some revenue expansion opportunities, whether it be gaming and e-commerce. And so I think that's what you see being reflected in the stock so far this year. And I upgraded the stock to a buy. I had been in a hold on the stock since I initiated coverage, since pre-IPO, by the way. And at the time, I was skeptical of their ability to drive user growth. I was concerned that the ad platform was inferior to competitors in terms of targeting and analytics. And I was also concerned that there was no clear path towards profitability and positive free cash flow inflection. And that turned out to be the case. But now I see all of these concerns are being addressed. I do see that user growth is coming back, especially with the Android rebuild. I'm seeing that with a lot of third-party data that I'm using. The ad platforms, per my checks, are a lot stronger, probably the strongest they've ever been. And they weren't strong before, just to be clear. So advertisers, I think, are responding to what they now see as a better advertising platform, improved targeting options and measurement, near par with the social media platforms like Facebook and Google, YouTube. So that's becoming a bigger part of advertisers' ad allocations over time. So I'm watching for that. And I think the new CFO, I think he's focused on improving profitability of the platform. They've done a good job at cutting costs. And I think as you see the revenue growth accelerate, you see some leverage. And I think they'll on the path to generating a positive free cash flow. I see that inflecting in the latter quarters of 2020. So things are moving in the right direction. Like I said, I had been negative on the stock for quite some time, but now I see more of a positive, more positive tailwinds for Snap in the core business. And then you have this optionality in terms of the e-commerce platform, similar to what you see on Instagram, developing on Instagram. I see the same sort of pathway for e-commerce on Snap, as well as the gaming expansion opportunity. I think that can be huge for them over time.
You've got a $17 price target. Is that correct?
I do. It's a very conservative price target, by the way.
Well, it's actually toward the high end of the street. I think the street high is 20 or around there. So you're not too far off from the high end. So it is only $2 off where it is now, but I don't know if there are too many price targets much higher than that. Do you break down their user base by like demographic, or do you have a sense of how many of their how many like young Gen Z millennials use Snapchat compared to Instagram, for example?
Well, the core of the user base is 13 to 24, and those are, I think, are very, very sticky on the platform, and actually don't really date. When I mentor a lot of kids in New York City. I've been doing that probably for the past 15 years, high school kids, and so I tend to see exactly what they use. They're highly addicted to Snapchat. They also use Instagram. It's just like a television network. You could go from one network to the next, to see your usage. So, and so they're not using just one platform; they're using multiple platforms. What they are using is Snap. What they are using is Instagram. And another one that's popping up a lot more frequently now is TikTok.
Yep.
So that's one to look out for. I'm seeing a lot more teenagers using TikTok over the past year than I've seen in the past.
And TikTok.
So that's probably the competition. If I would say competition for Snapchat, I would say TikTok will be probably one of the fastest growing competitors in the space right now.
And they're privately owned by a Chinese company, right?
Correct. Yeah.
Okay. You also upgraded Yelp last month, I believe, to a hold. I think you got a $29 price target there on Yelp. Had a bit of a rough year. Can you kind of outline why you upgraded now?
Yeah, so just a little bit of history. In June of 2018, so last year, I downgraded Yelp to a sell, and that was predicated on my belief that the lifetime value of the count base was diminishing by as much as 25%. I walked through the math of my note. which several, buy-side guys disagree with at the time. And, I thought given the changing nature of the model, the customer acquisition cost per account would likely increase over time. And this new request to quote feature, which is something similar to kind of what Angie's List and Home Advisor is doing, that I felt would underwhelm a lot of the bullish expectations on the sell side as well as the buy side. And I thought it would likely be cannibalistic to the local advertising revenue growth. I got intense pushback from the buy side when I downgraded to sell. When I mean intense, I mean I could show you emails from buy side guys disagreeing with me left and right. But I was proven correct over time. The model did succumb to just about every single one of the issues I had laid out in my downgrade to sell. I upgraded the stock from a sell to a hold, and this was I think in early June when the stock had already contracted about 40% from the highs when I was calling for the sell. And my rationale was that I felt that at the valuation where the stock was trading, looking at it roughly 7-8 times in 2020 EV to EBITDA, I thought a lot of the issues that I had laid out in my initiation, in my downgrade to sell, was had been reflected in the stock. And so I felt it was only 5% away from my price target. I didn't really see further downside from the $29 price target, and I felt that they had a nice sizable share purchase. I think that should help sustain the current share price. And I felt that even though they are having some challenges in terms of driving local advertising revenue growth, which had decelerated for the third consecutive quarter, and also request a quote, even though the revenues were growing at a rapid clip, the annualized revenue growth rate had decreased. I thought that those challenges were essentially reaching somewhat of a bottom. So I felt compelled to upgrade the stock to hold. I'm not saying buy the stock, because I still think that there's some challenges in the model that they need to work out, and probably take another year or so. But I think further downside is limited.
From your comments there, it seems like you kind of keep like a left eye like on the charts a little bit. Like when I noticed it, you were talking about Yelp and the price action. It had, the big move down after earnings. And then you're right. It made the low in June and then had long consolidation period. You said it was 5 points away from your target, and, you adjust. I mean, the markets, as much as you like to pinpoint exact levels and stuff, I mean, how much does a technical analysis go into your work?
I'm a fundamental analyst, so I just pay attention to fundamental factors. So, like I said, I listen to, what the technicians have to say about a particular stock. Particularly, I do have traders in-house, and, they tend to pay very, very close attention to technical analysis. I think that's the case for every single trader. So, we have to pay attention to what the charts are saying. But we are fundamental analysts, and so I base all my valuation on that. But yeah, I do pay attention to it.
Okay, and just Twitter here before we let you go. Nice bump after earnings. Gave you a retest here of that earnings area, back up here, pretty much a trading range. I mean, you got the election coming up in 2020. Do you see any drivers here to get Twitter back over 40 and stay over 40?
Well, yeah, I think there are areas of significant potential upside in the model. They've did some really, really great work in terms of continued health and safety on the platform, and I think that should help drive greater engagement.
Okay.
That's one. Number two, I think the platform is still really just demand constrained and supply constrained, and so I think there's still runway to increase ad loads, particularly on the international timelines, and so that's another upside potential for them. I think they have minimal exposure to direct response advertisers compared to Facebook, which means that there's opportunity for them to really go after that that subset of advertisers of direct response, and they're putting some initiatives in place to get that going. And I think they're still in the early stages of incorporating machine learning and AI to improve ad targeting and increase ad relevance. And so, that's working for them, I think, in a positive way. And you should see, the results kind of work its way through, on a quarter by quarter basis. So, but there's still product improvements, I think, that could drive usage. The beta testing a prototype of an app called Little T, that should help. But then, you talked about, you just mentioned some of the catalysts. The election spending, I think, should be a catalyst. I'm starting to see a lot of that, evidence of that on my timelines now. I think a lot of the Euro Cups, the World Cup as well, the Summer Olympics is coming up. And so, and I think 2020 should be essentially a margin expansion year for them. So that's it. I did all of that from memory. So I'll be talking about two different.
Victor.
So,
Victor,
that's all I got for you.
Victor, before we let you go here, of all the stocks in your coverage, which one are you most excited about for upcoming earnings?
Well, I tend to break out my coverage between large cap and small cap. I made Facebook my top pick for the year. The stock is up, probably good 45%, 50% since I did that. I still think there's a lot more upside for that stock. So I'm excited about the stock and the earnings. I like it. I think you'll see some positive results from Snap as well next week, next Tuesday. And on, at least on the mid cap side, IAC is my chosen stock, but they're dependent on Match Group and also Aegis. And Match Group, from the data I'm looking at, tended it continues to grow at a rapid pace. So I think they'll benefit from that. And also on Aegis, which has come in a little bit, and I think it's due to competitive risk from Google, which I think is unwarranted. So I'll be buying Aegis aggressively into earnings. And so Aegis, IAC, Snap, and Facebook are really what I'm looking into the second quarter earnings as stocks to buy.
All right, Victor Anthony is a managing director at Aegis Capital. Victor, thanks so much for the time today.
Thank you very much.
All right. 8:51 here. Joel, are we moving or what?
We're still moving here. We're going to let Triple D finish up what he's doing there. I'm sure he's got a pile of stuff going on. It's just a rally. I mean, we just have rallied. We were trading at 28.77. When out of the corner of my eye, the spoos started to light up, and haven't shorted it yet. I was thinking the pre-market high, the old pre-market high, but now we're just going. We are back Tuesday's high. We're through that. We're through Monday's high, Friday's intraday high. I mean, maybe just go for an all-time closing high today, and that would be at 300, 300 have to get used to saying that 3,000 handle, and the all-time high was made last Friday at 3,006. Let's talk a little Tesla here, trading up 4.44 at 234.50. They had a little news overnight.
Just an email to employees to prepare for increased production, but they were very vague.
All right. Well, vague or not vague, it's trading up in the green here. Was a fade off that delivery announcement. You got into the 240 handle, and we kind of talked about 235, cut through that, filled the gap nicely here. You had a gap at 229.15. You got through that on 2 different days, and now it's going back up. Let's see here. The high on the delivery day is really the only thing you're looking at as far as resistance. That's at 241.57, 234.90. That was the close on that day after it sold off. So pretty thin above 235 up to that 241.57. Spoos continue to rally, new highs on the session, up 14 handles. Still see Goldman Sachs in the red. I see Bank of America in the red. Let's see what they've done with the TLT here, because Dennis, keep an eye on that. TLT is almost back to flat here, only down a dime. So let's move on. And you said PayPal had some guidance?
PayPal did have guidance yesterday. They said thanks to some strategic investments in the quarter, they are expecting a bigger than expected earnings boost. They invested $750 million in Mercado Libre earlier this year. And so
what do they invest in?
Mercado Libre, they're a online marketplace in Latin America. And they came out and said thanks to investments like that, we're expecting bigger earnings this quarter.
Bigger earnings this quarter. They like it. The only thing that one number only is the all-time high in PayPal. The all-time high is at 119.95. I don't know what it was, the news on day. It was just a market day. Your all-time closing high, 118.79. We are above that. So we're right there. Taking a look, busting into the 120 handle here. So no resistance to talk about here in PayPal.
While we're on the topic, Square had its best day in 6 months yesterday.
Yeah, and you know what? I'm kicking myself on that one because it's set up so nicely. It's set up so nicely. You had the highs, a couple highs at 74, and you had a flat open, and boom, you went down and filled the gap. Boy, this trade station is really on my daily. I wonder if I changed the setting on my daily charts here to include something else here. No, regular session, but for some reason, TradeStation's already picking up the trades here from the daily, and it's not open till 9:30. So anyways, you had the higher open. You snuck down just under the previous day's high, 74, 73, 96. Closed at 77.96, trading in the green here now. Maybe with this kind of rally in the market, you want to start to think about 80. 80 is only a psychological level. Your next true resistance comes in at 81.03, and that was your high from March.
Look at the action in IPOA yesterday. This is a stock that doesn't really trade its busiest day of the year. Prior to yesterday was 4.5 million shares, but when you merge with Virgin Galactic, you're going to get some volume.
You called that? Did you say it was going to be a volatile day, or?
I mean, it was volatile by the time the show started, so I don't know if I called anything.
That's a big old bar there, folks. Boom, boom. You got up to 10.97 and then pulled back to 10.69. So you still had a good day, but fading off the open. I like to see, hold yesterday's low, 10.53. We're comfortably above that, 10.97. New all-time high for the stock. So bust through that $11 and you don't have anything in there. The stock hasn't been around that long, but just hit 96.25. Right, that was right. What do we got there? Nope, nothing there. Friday's intraday high was 97.75.
All right, so we paused in the S&Ps, Joel. Looks like around.
Pause?
Well, I'm looking at the SPY 297 is pretty much where we're at. So at least we stopped going up. So things looks like they could be calming down.
Yeah,
That was a complete, I've been trying to recover here for 27 minutes. That was a complete flip on everything. Like, we're way down. TLT is way down. So everything that, you're looking at and trading changed on one comment. It shows how much headline risk is out there in this market. It just trades on headlines. Powell says one thing, and we rally 20 handles on the S&P. We rip on the TLT higher from where we were. Banks go way down. Now they're starting to stabilize there a little bit. They definitely got overdone there with somebody hitting Goldman down 2 points. Like Spinner says, there was this one trade down there, but it's coming back. But I mean, holy cow. The headline risk is absolutely insane, from one comment. Like how do you, as a trader, you've got to just, when that happens, you're out there, you got to adjust. I'm trying to adjust quickly. I've had a thesis here, and obviously that thesis completely changed at 8:30 with those Powell comments. So now I'm trying to actually do the opposite of everything that I was positioning for today. So you're sitting here and you're scrambling around, trying, to adjust for the new headline there. And it's tricky. I mean, you've got to, be really fast in this market. I'm sure, the algorithms are all over it. They love it. The headline algos on something like this, but it's a tricky market to wrap your head around when it's so headline driven.
Yeah. We have backed off the highs. I hope everyone was on their toes out there. We tried to alert it. I mean, you saw the spoos move before.
It happened fast though, real fast. I got hit a little bit too. So I adjusted, and the first thing I do is cancel my orders. I'm obviously positioned wrong here, so I've got to for the new information. So I got to get out of the way. Now readjust. Slowly readjust. Position yourself. Some of the positions you currently have are going to be wrong, obviously, because the market has completely done a U-turn here. So everything that was said in the first half an hour of the show is now basically the opposite. Basically the opposite. We were looking at that strength or the weakness in the TLT, thinking, okay, it's going to be a tough day for utilities. It's going to be a tough day. And, and now that scenario is completely reversed. So now, even though the TLT is still down on the day, if you're just coming in, but it was so far down before. And now, XLUs went positive. It's crazy.
How does that make you
So what
feel?
was the actual statement that really, I know he's talking. Was there one specific thing he said that made it blast off here? Was there one specific thing?
Yeah, it was basically the implication that the data is starting to back up what people have been saying with regards to the economy. The Fed is more data dependent. Okay, so he's saying the data,
Saying weakness?
the data is starting to show that, so we have to react. So
What weakness?
I think the exact word was cross currents are weighing on the outlook.
Or indicating the Fed will act as appropriate.
Targets are at all-time highs, and
Yeah.
we're panicking that the economy is weakening.
Yeah, I don't.
And just nuts.
Well, the market's not the economy, so.
Sure it is. And people say it's not. Sure it is. It actually predicts the economy. It's 6 months ahead. Go back to your finance. It's a predictor of the economy. It is the economy. I mean, so that's not true at all. So I'm looking at this, and the market's ripping higher again. Here's Powell. You know what? It's the whole thing. Wants to keep his bloody job. Trump's threatened him so many times. I don't know. Anyways,
I see the Fed will act as appropriate to sustain economic expansion. That means lower.
We're going to defend this market no matter what. How do you short this market?
I have no
How
idea.
do you be short this market when you've got everything defending it all the time? The market is built on a house of cards. We know that. But the house of cards continues to get built higher here, and every time you have a little bit of a crack in the foundation, they come right back in. We just dig the hole deeper. We printed ourselves. How do you be short this market? Every time it goes down, even a blip, the Fed's going to defend it. So I don't know how the bear thesis. There's so many bears out there. I just don't know how you support the bear thesis here when you have everybody defending this market all the time. And honestly, I think Powell, and I think the Federal Reserve is just catering to Trump to a certain extent. He's argued, about, lower interest rates and, it's not fair for him. I think there's been a lot of catering going on there. I'll say that. I'm allowed to give my opinion here.
Sure.
I just don't see any reason, when you go out there, it doesn't seem like we're in a recession here that we have to all of a sudden be worried, I think it's all nonsense. Anyways, that's my rant.
No,
I'm
that's
ranting a lot today.
I hope things flatten out for you. That was one of the.
No,
big...
that's fine. That's fine. I'll work out of those positions. I'm not, sure you're ticked off, you get picked off a little bit, and it puts you in a bad mood. But that makes you go on a rant here, and you just think, what utter, Chris Irons there, quote the Raven, was at the Benzinga Trading Summit, and the first 3 minutes, he's colorful with his language, but everything he was saying made sense. It's what we've been saying all along. I mean, what data are they looking at? Like, what are they looking at that all of a sudden, we went from this, December where we got to start raising rates here to a complete reversal. And now we got to start lowering rates. Not only that, we got to lower by a half. Did they not look at the jobs number last Friday? Is that just thrown out the window? We don't use that data because it doesn't, work with our own thesis here? Come on.
I don't know, Dennis. I really don't know. And it's just like you said, from a long-term portfolio perspective, how can you fight this?
Yeah, how can you fight it? So that's why I stay, I'm going to stay, going to be fully invested in this market. It's craziness.
All right, Dennis.
And you got to be willing to flip as we saw at 8:30. So on that note,
on a dime.
That'll be it for today's show. Thanks to our guest, Victor Anthony. Thanks to all of you in our chat rooms, both on YouTube and premarket.benzinga.com. Our show is available in podcast form, iTunes, SoundCloud, Stitcher, TuneIn, Google Play. Please remember, all the information on our show is meant for informational purposes, not for investing or trading advice, especially the part about your favorite pairs of jeans. On that note, have a good rest of your day, folks. We'll be back with you on Thursday.